Hey there! My name is Jamaica A. Darrow and I considered myself as a moderate investor. As a moderate investor, I balance my investments between risky and safe asset classes. I am taking some risks on my investments and usually set a percentage of losses that I can handle. I earn when the market does well, but does not suffer huge losses when the market falls. My investment instrument with regard to this is mutual fund. Mutual fund offers diversification at reasonable costs because the fund companies are able to spread the fees and expenses over a large asset base. Stock funds invest in stocks, bond funds invest in bonds, and balance funds invest in a mix of stocks and bonds. That's why this is fitted for us moderate investor because we are willing to accept periods of moderate volatility in exchange for the possibility of receiving returns that outpace inflation. Here is a moderate portfolio example of a mutual fund type, which includes 55% stocks, 43% bonds, and 2% cash or money market funds. Mutual funds pool money from investing public and use that money to buy other securities, usually stocks and bonds. The value of the mutual funds depends upon the performance of the securities they decide to buy. Mutual funds charge annual fees called expense ratios or in some cases, commissions which can affect our overall returns. So these are the advantages when you invest in mutual funds. First, liquidity, which means that it has the availability to a market or company. Next is diversification, or it has mixing of investments and assets within a portfolio. Next is minimal investment requirements, professional management, and lastly, it has a variety of offerings. In the contrary, the disadvantages of a mutual fund investment includes high fees, commission, and other expenses, since there is what we call a broker who will manage our investments. Large cash presence in portfolios, difficulty in comparing funds, and lack of transparency in holdings. As a moderate investor, investing in mutual fund is advisable to me.